Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, August the 30th. My name's Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. And remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. Across the pond, we got German import prices came in at negative 0.2%, expected to be even. Lower prices. These tariffs and everything else are really not showing up. German preliminary CPI, Consumer Price Index, 0.1%. And we also got Spanish flash CPI, Consumer Price Index, which came in line with expectations at 2.2%. German unemployment change was in line with expectations as well. Let's move over here to the United States, and we've got our core PCE, which is Personal Consumption Expenditures Price Index, 0.2%, in line with expectations. Again, a lot of people worried about tariffs and everything else jacking these numbers up, not really showing up so much. Also, personal income coming in at 0.3%, expected to be 0.3%. Unemployment claims coming in at 213,000, expected to be 214,000, pretty much in line with expectations. And natural gas storages had a build, came in at 70 billion cubic feet, expected to be 58 billion cubic feet. So just slightly higher than expected there. Not really a whole lot to say other than economic data is pretty decent across the board here in the United States and across the pond. We did see some iffy economic data not too long ago, but that's kind of looking like it might have been just a miss for a short period of time, because pretty much all the other economic data points are coming up pretty decent. All right, let's talk about the overall market. We got crude oil moving higher today, wanting to test that $70 a barrel mark. I don't believe that's going to be too difficult of a task. The bears will try to short at that area, I'm sure. But the next line in the sand is $71 for crude oil, and that lines up with the 61 Fibonacci extension. So other than just getting a little overdone to the upside, crude oil probably could break that $70 mark because of the resistance area being at $71. There's been a lot of pretty decent volume going on at that level, and now that we're above this 50 Fibonacci on the 3-year chart, that will act as a major support. So I don't really see it going higher than 75 and lower than really 60 anytime soon. I think it's really going to stay in the 60 handle and bounce back and forth for the most part. Not to say that it won't break through and pierce that, but I think that 70 gets a little bit long right now, especially with the economic data. Gold futures having trouble today, coming off after defending the bulls' major defense of that 2,000 mark yesterday. The rally up and away came down very close to touching that number. Haven't really pierced it, but that's a psychological level. You can see that there's no real Fibonacci's in and around this area. Therefore, it really is a psychological level, and that is as strong of a support and resistance as any other support and resistance as far as I'm concerned. Sometimes I believe it actually trumps the other support and resistance. All right, so Bitcoin again struggling today, down a couple hundred points. Thought we might be looking to try and travel up and get into that point of control where the most time and volume has been spent. We just keep coming up a little bit shy of that. It's as if the longs there really kind of are willing to lose a little bit of money right now and not patient enough to wait it out. So Bitcoin having a little bit more of a difficult time than I would expect. Bonds are making a bit of a bounce today. I believe it's more of a dead cat bounce, and that's what we used to call it, is when you'd see the sell-off after a big rally, you get a bounce, people start buying into that, and then the fallout. I think that might be what we're seeing here with the bonds, because economic data still good. Fed still talking about increasing interest rates. The bonds can't go anywhere but down at this point unless there is some outside help coming in trying to have a flight to quality in a sense. from other bonds not being as good in other nations as the United States bonds is. Okay. We've got VIX moving just slightly higher. The equities are down for the most part. That being said, VIX has been slowly, incrementally increasing after we see all these all-time highs. That's when people go in and start buying protection when we're at those all-time highs. And that's, I think, what we're seeing right now. So let's look at the overall equities. We've got the Dow Jones Industrial Average off by about 100 points right now and near the lows of the day. I think it's pretty much just profit taking going on, you guys. There's just no economic data coming out right now that would really gear us towards this downslope. NASDAQ is in positive territory right now by 1 point, as you can see, a new historical high today. That being said, it's starting to look a little toppy again. We're starting to get these little topping patterns that haven't been confirmed, but at all-time highs. We have to be very conscious and cognizant of what's happening here in the markets. We're seeing the VIX spike a little bit. That tells me a lot of people are putting on puts, worried about the upside. Is that a catalyst to roll us over? A lot of times it is. That being said, I'm very, very cautious about the upside. I did put on those SPY calls yesterday, but for the most part, that was a hedge on deltas against my portfolio, and really looked like we were going to start rallying, but it looks like it's going to be a little bit tougher slog higher than I kind of expected. The E-mini S&P is off on the day as well, above the 9,600 handle. Haven't had a all-time historical high today. Intraday, as you can see, this high happened overnight. I believe that the market is going to want to try and at least go up and print that intraday. Haven't made much of an attempt to do that today, but we could see this little bit of a rollover and a bounce to recover that as well before we go back down and cover that gap that I talked about yesterday in the SPY. Rather have that hold off and go up to the Fibonacci extension there for me. But that being said, let's talk about a couple of things that I've got going on. EWZ, I have a trade or a working order right now, very close to 50% of my max profit in this. If you remember, I have on the set 36 calls, super high implied volatility, especially for a ETF. And then that coupled with directional move is helping me out. Volatility, as you can see, is continuing to rise, but directional move has helped out quite a bit here. And in those 36 calls, I originally sold them for 40 cents. Right now, I've got a working order at working to buy them at 15 cents, and I believe it's offered at 20. So just working a little bit of bid, kind of waiting to see how this all shakes out, squeezing it for a couple of extra pennies, but likely we'll be covering that today. All right. So that's about it for this webinar. Today, Thursday, is going to be on the strata with no downside risk. So if we are worried about all-time historical highs, this is a great time to put something on like this, because we're going to struggle to continue to just march higher relentlessly as people start to cover longs from below. Therefore, this strategy, if we have a correction, will protect us on the downside. If we think it's going to kind of ratchet and move sideways, this is a great strategy for a neutral to bearish assumption. And I'm going to show you how to increase your probabilities of success with this strategy in today's webinar. Yes, you can go online and figure out how to do this, but they aren't going to give you all the rules around implied volatility, duration, and all of those key aspects in order to increase your probabilities of success like I do. So check it out at protraderstrategies.com. And if you can't take that, I missed. Can't take that, take it easy.